Hey everybody, Boris speaking at Forex. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar for September 17th to September 21, 2018. And a story in the COM dollar land actually is that is both going to be, I think, funda and headline driven because certainly China takes precedence over everything at this point. And it looks like the Trump administration may be going to go ahead with the $200 billion worth of tariffs on the Chinese trade, in which case, certainly case negative for Aussie and Kiwi, and we saw that weakening at the end of the week. The levels this week were kind of interesting because we tested the upside level because of the strong funda in Aussie. We ran through the 72s only to give it back. And we'll take a look at the technicals because I think in many ways that failure confirms that the downtrend still stays in place. It was a kind of a week that shook out the late shorts, but did not destroy the downward trend that Aussie continues to trade in. Kiwi looks, to me, my opinion, most vulnerable here, especially because we have data, and I will get into that in just 1 second, that could trip it up to the downside. And then finally, of course, the other headline risk is the NAFTA negotiation with Canada. What's interesting here is that Canada is acting much better than you would think. It really looks like they're just not coming to terms on the NAFTA deal, yet loonie really isn't as badly hurt as you would think, given the state of negotiations at this point. So the technicals on the loonie look better and suggest that any break of a positive news could certainly take us below the 130 level. So levels pretty much stayed the same as last week, but now I think the bias may be a little bit more negative, both in the Aussie and the Kiwi especially, and even in dollar CAD. So 72.71 is a level in Aussie. 32.30 is level in CAD. Kiwi still at the 66.65 level, but now the 65 retest looks pretty vulnerable to me. On the calendar, we have the Australian meeting notes, the September meeting notes, which really just have no impact whatsoever because nobody really cares. They're not going to, I think, change any of their status. They're going to stay resolutely neutral, which pretty much essentially keeps it at that point. The most important funda data point on the commodity dollar front is the New Zealand GDP. The market is looking for, I think, a 0.8 against 0.5. We're actually bullish. So Kathy is actually bullish this particular trade with stronger retail sales and trade. If that's the case, then Kiwi could hold bid here at where it stands. But any kind of a disappointment, I think, could send Kiwi towards the 6,500 level, and perhaps even a speculation. It could test that before the GDP numbers come out. But if the GDP numbers come out, especially if, as Kathy is sort of forecasting, it's a bullish number and the market comes in negative, it will only be a double disappointment that could really press the 6,500 as a key test level. And then in CAD, we have the retail sales, the CPI. Don't have a trade on this because the price component increased slightly, but the employment and wage growth sort of weakened. Hard to say. U.S. CPI was weaker. Very likely Canadian CPI would also be weaker. Let's take a look at the charts here, though, because that's where the interesting action lies. So here's the Aussie to me. So yes, last week, we got, if you were trading this to the short side, you probably got clipped out above the 72 level. But in many ways, this was the short that broke the back of late shorts because it was a fake out move, right? It didn't clear the 20 SMA, really didn't show any signs of stabilization in the Aussie. And if you look at it at a longer term basis, Aussie continues to be a downward trend. Closing at the lows on Friday against this China worries, if Trump begins again to beat the drumbeat of trade war, it really looks like we could test the 71s. At that point, that becomes very interesting because 71s certainly is a key support. But as we looked at it earlier, once that thing goes, if 71 goes, because this has been a pretty long support for a very long time, right? There is nothing here until like essentially 69, 68. So my point is that if 71 goes, 70 could really be in play very quickly. Similarly, Kiwi here. So yes, we may have better data as Kathy projects, in which case we sort of hold bid here. And it could be like, if we hold bid, ironically enough, this could be the consolidation week that could just turn and change the bias to the upside. One thing that would make me more bullish Kiwi is if we sort of consolidated this level and then came through and closed above a 20 SMA. At least that would show you that we are leveling out and maybe ready for a counter trend rally. But we remain below the 20 SMA. We closed on the lows of the day on Friday, and even though 65 is just within striking reach here, and this was the key hold last week, it's very tempting for the shorts to want to press it, because once you break the 65 barrier, again with Kiwi, same as Aussie, there is nothing there until really 62.5. It just becomes a pocket, and the momentum trade here, certainly both the momentum trade in the Aussie and the Kiwi at the beginning of the week, looks good to the downside. Dollar CAD, on the other hand, very different story here. The negative NAFTA news just not hurting it nearly as much. Given how negative NAFTA news is, we should be trading 132, and the fact that we're not suggests the market still likes the caddy. And any kind of positive news really flushes us very quickly below the 130 level. Now, the support here from beginning of end of August was around 28, 29. That seems to be the natural double bottom target that it would test to the downside. So for now, I think the support in the pair here, longer term, comes in at 29, resistance at 32. Any kind of a rally above here is shortable until the 32s. If we get through the 32s, then it's a completely different story. It's a pro-dollar story with a very negative dollar caddy story, and we'd go right back towards a move to the 34s. But for now, the fact that this is a very mild bounce against pretty negative news makes me actually want to get long Canadian dollar, which is short dollar CAD, into a possibility that NAFTA finally does come through as a negotiation, and we could break down to the downside. Having said this, though, of course, it's all headline risk, so technicals go a very short way to informing your trade, simply because it could go very, very badly, or it could go very, very well, and that's impossible to forecast at this point. But for now, those are the levels that I would trade, given the technical foundation, and it seems to be the path of least resistance for the time being. Wish you guys the best luck, the best trading. Boris, over now.